What's up, guys? Andrew Kulakowsky here, and today I want to share with you some of what's going on in the Niagara real estate market. I'm going to talk a little bit about the numbers for June, and then I'm going to break into some of my key observations that I'm seeing on the ground floor right now. So stay tuned. We'll dive into it. All right, guys, in Niagara for the month of June, we experienced 884 property sales. It's residential. That's 13% up year over year. 1,199 new listings. That's up 4%. We had 18 days on market as an average. That's up 56% year over year. So we're still seeing a really fast-paced market overall here in the Niagara region. And then lastly, the average benchmark price is now sitting at $655,200. If you'd like to see the full report for all 10 municipalities, you're welcome to click the link below. Some of the key observations that I'm seeing right now with my boots on the ground floor. The first one is pricing is finally catching up to the market. What I mean by that is that we actually now have data because the market has been moving at such a rate with regards to pricing since January. We've been averaging 35 to 40% year over year. When January and February hit and we were starting to see these massive increases, we had no previous data to support any of this. So it was extremely overwhelming as realtors trying to assist in pricing things. The market was experiencing, as everybody knows, multiple offers, crazy amounts over list price. So there was no data to really support this and make any sense of it. Now that the market is now been hovering at a consistent 35 to 40% increase, we now have 90, 120 days of market data to support this pricing. So it makes it a lot easier for sellers and realtors to come up with list prices based on true market value now versus before. It was very challenging because we had no idea what to expect when bringing a property to market because of the overwhelming demand. Second thing is we're starting to see the demise of offer presentations. We're starting to see them disappear a little bit. The reason for this is quite simple. The buyer pool that is in the market right now is simply just tired of it. They're just tired of offer presentations. They know that there's going to be other opportunities or other homes that come onto the market. The urgency level has subsided slightly. So we're starting to see realtors advise sellers to maybe steer away from offer presentations, so they're not scaring away any potential buyers that just don't want to compete anymore. So we're starting to see them kind of fade away a little bit and more or less just open offers at any point in time, which is a great thing to see. I always say that a balanced market is a healthy market, so this is positive. We're seeing a little bit more inventory hit the market, starting to see maybe a little bit more inventory than previous years in the months of June and July, and I think we're going to see that going into August. I think because COVID and things starting to open up now at this point in time, there's a lot of sellers that maybe wanted to sell in April and May that have been sitting on the sidelines waiting to see what's happening. And now that things are starting to open up and become a little bit more normal, I think those are the ones that are vouching to bring their property to market in the summer months. So I think we're going to see a little bit of a surge of inventory hit the market over the next couple months. Also, too, being summer and with school starting back in September, there are a lot of families out there that are actively in the market right now that really want to kind of get their house secured and closed before the new school year starts. So I think again, that's going to lend perfectly to a healthier market and give buyers a much better opportunity out there. Another observation I'm seeing is that we're seeing less offers on properties overall, whether it's an offer presentation or just an open offer scenario where you could bring offers at any point in time. I'm definitely seeing less offers. The properties that I have seen have offer presentations that I've been involved in, it's definitely changed. 2-3 months ago, it would be normal to see 10 to 20 to 30 offers on a property. Now we're seeing 2 to 3. So again, this is lending perfectly for a much healthier, balanced market. Unfortunately, sellers, I think that ship has sailed. But again, buyers, this creates a much better opportunity to get into the market. Another observation I'm seeing is rental demand for really good rental properties has skyrocketed. Just as a quick example, I experienced this last week. I listed a townhouse condo for rent in North Niagara Falls for $1,900 a month plus utilities. I listed on a Saturday afternoon on MLS, as well as I put it on Kijiji, and I had an overwhelming demand and interest, phone call, text for this property. I had a pretty good idea that there was going to be a lot of interest. I actually underestimated how much demand there was really going to be. I ended up getting 4 offers from 4 agents within a 48-hour time period, and we ended up leasing it for $2,000 a month, so over list price with competing offers, and getting 12 months rent paid up front. So if you're an investor and you're watching this right now, I can tell you that there is, without a doubt, a big demand for nice rental properties. There's a really low supply. Unfortunately, the effects of this is I do feel for tenants. It is a challenging market out there. If you're looking for a good rental property, there's a lot of competition. And I think, again, the reason for why there is a low supply of these properties is a lot of investors have sold their rental properties. They've taken advantage of the market, which has flooded a lot of tenants into the market right now all at once. So I do hope we see a little bit more rental inventory out there to kind of level things out, and again, give some good tenants an opportunity to find a really good rental property. And then last but not least, I am noticing houses sit on the market a little bit longer. And I stress when I say houses sitting on the market, this is not, they're still moving at a very, very fast rate, even in comparison to a few years ago. Right now, sitting at an average of 18 days on market, that is extremely fast for the Niagara region if you look back. However, what I am seeing is I'm seeing for sale signs sit longer than normal. There's a couple things that are contributing to this. One is a little bit of pricing. I think there's a lot of sellers out there that are maybe a bit ambitious, trying to ride the wave of what happened with pricing over the last few months. The other thing that I'm seeing is that average or just below average properties, or even subpar stuff that isn't really nice. Whereas like 3 months ago, buyers would have been lining up just to buy anything. Now what we're seeing is that buyers are picking and choosing their properties. They're not lining up to buy the ugly ones anymore. So that's the reality. If it's a subpar property or just average, it's going to sit a little bit longer. It goes back to normal markets and what you need to do to set your property apart, which is for a whole other video. But those are the key observations that I'm seeing in the market right now. Again, if you ever have any questions about the Niagara market, I'm always here and always available to help. Hit like, subscribe to my channel, and thanks again for watching, guys.